morning, everybody. Mike Vaki, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, daily chart to start off with. We talked yesterday about how the weekly pivot was tested in the Sunday overnight. It held, up we go. So all we have done is just different variations on a long. We were long 76s, long 86 half, long 85.75. So currently long 85.75. We took profits overnight. I have a runner, the room has a runner even stop. I mean, we're just letting it work. It's a situation where the bears really have no credibility as long as they're above the weekly pivot. We're now in an upper band ride. You can see that here, riding this yellow line, the upper Bollinger Band. And as long as that's the case, they're going to walk things down in the morning. They're going to find an area to buy, and they're going to come on in and buy it. We didn't even really get to that point yesterday. It pretty much blasted up off the open, and then it was just a very slow bleed. Very slow bleed, very steady bleed, and you wake up and you're at 25.93 half. That's, not quite 20 handles of work put in over 2 days, and it's all pretty much straight up. So what do the bears need to do? Well, the first thing they need to do is break the band ride. They can't do that today. The band ride will survive into tomorrow. They would need to spend the entire day without interacting with the upper band. Basically, price would need to be below it. And then they would need to trade below the prior day low. If they can do those things, then maybe, just maybe, we get a retest of weekly pivot and the 9-day simple moving average. But unless the landscape of this market changes, the move back to the 9-day simple, the move back to weekly pivot is going to be a buy. Now, am I a perma bull? No. What I am I'm a perma what's working. And right now what's working is buying dips and letting longs run. When the bears find their car keys and we get a pullback, I will be perma sell rallies because that's what's working. So the reason you're not having me give you a bunch of bear scenarios is until the bears can, find their car keys, there are no bear scenarios because every one of these moves back gets bought. When they stop getting bought, then the bear scenarios will pop out. But if you're watching a market on an upper band ride do 20 since Sunday night and all that's popping into your head are bear scenarios, you're fighting the tape. Don't fight the tape because you're going to put yourself in a position where you're going to be either taking paper cuts or larger losses or whatever. And that's not good. It's not good for your brain and it's not good for your account. We're going to be talking specifically today about how to handle losses. I think it's the number one most important thing for a trader to understand, accept, and deal with if they want to have any kind of longevity as a trader. So 4:15 this afternoon, myself, Tony Rago, Spring Hill Jack. It's the next in the Trader Psychology series, How to Handle Losses. The sign-up link is here on the YouTube. It's all over Twitter, Instagram, the whole thing. Come and join us. Sign up. That way you get the recording because I think it's something that everybody, whatever you trade, futures, stocks, options, baseball cards, you need to understand how to handle losses or you're not going to be in a psychological position to let your winners run and grow your account, bottom line. So I hope to see everybody there. Hourly chart. Bulls are in full control above the weekly, and there's new all-time highs again. So, bears are trying to hang their hats on the matching high thing. That wasn't going to last. As soon as this held and it got back up and through, and the dip buyers, just they were all clear. And once they got up top, then they just slow blooded here. A little bit of give back into the close, and then pretty steady up overnight. And what are we doing now? We're just walking it back. We're finding another dip, and that dip is going to be a buy. And chances are we bleed up the rest of the day. Daily pivot comes in at 84.67. You got weekly pivot down here still 76.33. So any move back to the daily pivot that holds, if it happens in the right time of day, we've talked about the morning turn in the past. You're looking at 10 o'clock to 10:30 in the morning. Typically when these things like to find their feet and the dip buyers feel like they can move it up higher. You don't want to be shorting in the hole in these situations. Let's say we do break down today. All right, I'll go there with you. Let's say we break down today. Okay, you don't short the breakdown. Okay, you wait for the dip buyers to come in because they will. You let it pop. You let the lower high happen, then you short the lower high against the lower high. You keep it tight, and then you see if they can go down and do weekly pivot. That's how you short the market. You don't start the market here, 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 here. I mean, what are you, nuts? It's just going to keep on rolling. You need lower highs. You need lower highs to short. So I'll be interested to see if this pullback, when they pop this, if it can't do 25.93 half again, there might potentially be a short there for a trade. But we'll see. All right. Everybody have a great day. I'll be around for the midday update. I will do the wrap up. Twitter, Instagram. Come check us out in the room, and come check us out at the webinar, How to Handle Losses. Incredibly important topic. You're going to get our take on it. I will see everybody there. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.